Good morning, everyone. Time for what I will call another shill update. One of my listeners sent a article to me. We've got another shill on board. This one's over at the Motley Fool, and I think that's probably an appropriately titled blog or whatever this thing is. It's pretty amazing that sites like this can go through the financial crash and still exist. I think, is Kramer on this? I don't know. So, just a bunch of shysters and crooks. Anyway, so I want to look at this article. This is by Alex Dumortier, and it's warning: silver will fall by 66%. Oh no. Okay, everybody, sell your silver. Mr. Dumortier is going to tell us why silver is going to fall by 66%. I wanted this to be a little lesson as well in shill busting, because you have to do this for yourself. So I'm going to do the typical shill busting technique, which is, first we're going to read the article and examine the arguments. Second of all, we're going to examine the author. And third of all, we're going to try to find some predictions in past articles. So that's the way you bust a shill, and we'll proceed to do that so you can get an idea of how it's done. Let's look at the article. Mr. Dumortier writes, "The silver bubble took on a new dimension this month with the price of the metal rising nearly 30%. Last Monday's share volumes in the iShares Silver Trust ETF was 5 times its daily average." Well, obviously Alex doesn't understand that this iShares Silver ETF isn't silver, but we'll give him that. With many investors cite capital preservation as a reason to buy silver, an analysis of the historical data suggests that those who pay nearly $50 an ounce will eventually suffer massive losses. Oh, thank you so much for looking out for us, Alex. Like gold, silver has lived up to its billing as a store of value if you measure your holding period on a geological time scale. Using data from precious metal dealer Kitco, I constructed a series of inflation-adjusted silver prices going back to 1800. Here's another one of these shills. Going back to 1800. Why? I don't know. It's easy to make his phony baloney numbers work. I don't know. Crazy. Going back to 1800, you're going through different currencies. You have currencies that came and went bust. You have different monetary standards. You have gold and silver standards coming and going. It's just plain stupid to go back to 1800. So I don't even know why they do that, except obviously to make their phony numbers work. By the way, can you name a stock that's been around since 1800? Can you name a stock that's been around since 1900? Yeah. According to which the metal generated a historical average return of 0.4 per annum. Much of that small premium over inflation is due to the price appreciation over the past 10 months. Oh, so this is, notice he's quoting the investment return in above inflation. So he's factoring that in. So, you know, he doesn't tell you that, you have to deduce that. There is no reason for investors to expect anything more from silver. Why would a commodity with no yield, accrete value? Probably the same reason why you don't know anything about it. But silver's price volatility disqualifies it even as a stable store of value. For proof, just take a look at the 10-year trailing returns since 1810. So its volatility disqualifies it as a store of value. What about the volatility of stocks? How about the stocks that went to zero? We're going to find a stock later that Mr. Dumortier doesn't want you to know about that went to zero. We'll take a look at that in a bit. Recent gains will reverse. Beyond the volatility of the graph also shows that silver returns are mean reverting. The alternating peaks and valleys in the graph illustrate the fact that periods of higher than average returns tend to usher in periods of lower than average returns, and vice versa. That's not surprising, as this property shows up across many different assets. Okay. So you said nothing. All right. Investors who have owned silver over the past 10 years have earned spectacular returns. Well, Alex, did you recommend silver over the past 10 years? Let's look back and we can find out if you did or not. Rival only by those earned during the 70s, a decade which ended with a huge spike in silver prices resulting from the Hunt brothers' attempt to corner the market. Somebody trying to corner the market now, Alex? Because that decade ended in a spike. Is this one going to end in a spike and huge losses? Really poor analysis. Silver then performed disastrously during the following decade, losing 4/5 of its inflation-adjusted value, etc. Silver could fall by 2/3. Silver prices are now well ahead of their historical average, the red line. Yeah, it draws a line back to 1800. Wow. What a clown. That's pathetic. The chart doesn't do justice to the extent of the gap that has opened up with respect to fair price since it ends on the average price of silver during the first quarter of this year. Now, no, see, he doesn't. This isn't his inflation adjusted chart. This is just raw dollars. So constant 2011 dollars. So I guess it is somewhat of an inflation adjusted price. We haven't even hit halfway of what it hit in 70. So, and he says here, silver is in a bubble, but I'm not predicting an imminent fall in its price. With silver at $50, who is to say it can't reach $100? I can certainly imagine that scenario. Once irrationality and speculative mania take hold of a market, there is no measuring how far the excess will run. So, and he talks about the miners. Basically, this guy doesn't know anything about silver. He's just some Wall Street clown. So let's take a look at him. We've got more articles. So we can go and check Mr. Dumortier's performance. He's a CFA, a Certified Financial Advisor. So you can trust him. So let's go back and see 30% missing from your portfolio. Oh, only goes back to January 20th of 2011. So through a series of researches and searches and diggings, I managed to find Alex's blog, and let's go back to his blog, which actually goes back to, his articles go back to September and October 2007, and he was also writing in 2008. So if Mr. Dumortier is going to warn us about bubbles, hopefully we'd find some warnings about the crash of the financial markets back in 2007. Of course we don't. In fact, let's look at one of his articles. Back then he was called TMF Bull and Bear. He's changed his name a number of times, not surprising given his track record. So let's take a look at this article. Long Bear, short Goldman. Yes, you got it right. This guy recommended I think going long Bear Stearns and shorting Goldman will prove to be a winning trade. Okay, Alex. $50 to tell me which of these companies went bankrupt exactly 7 months after you recommended it. That would be ding, 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 ding. Bear Stearns went bankrupt 7 months after Alex recommended going long. So there's one for you. Not the greatest track record. And let's go to his gold call. Warning, gold could drop below $500. Now we see when we read this article, this was posted last fall, and he's warning the risk of investors paying more than $1,300 an ounce. Has gold hit 1,600 yet? I can't remember. High 15s. Gold's real return, 0. So, of course, now we get to go back to 1851 to see why gold doesn't really return anything, and its average price and constant, same sort of nonsense. So Here we go again. Another Wall Street. I don't know who this guy is. Just some Wall Street goon that they've trotted out to recommend shorting silver or something like that. Let's go and look at another one of his bad calls. You'll have to fish through here, but basically halfway through 2007 he recommended going long MTG, which is Magic Investment Group. So that was roughly somewhere in here. He said it lost half its value, so let's give him 60. So let's say recommended at 30. Well, there's a good call there, Alex. Right now it's trading at 8.66. It really should have gone bankrupt. These are the guys that do your mortgage insurance. So the low on this thing was about what? 4? 52-week range 6. I don't even look. Basically, by following Alex's advice on this one, you would have a 90% loss. So just another shill. They're all over the place, and they're really not that hard to spot. They kind of all say the same thing. They love to bash silver and gold, and they're wrong just about all the time. So that's Mr. Alex Dumortier, CFA, and he wants you to sell your silver. So he probably would want to buy, considering his track record. Talk to you next time.